Everyone watching IBM is asking the same thing right now. Why? The stock leapt 12.7% on Friday, and FOMO feels real, but rally may be overstated. What the market ignores is IBM's AI cloud bookings surged 38% year-over-year this quarter. That single metric lifts the top-line outlook by $1.2 billion, dwarfing the headline hype. The lab ran the numbers. Lab score, 65 out of 100 by. IBM surged 12.71% to $297.80 because its 1,121-qubit Condor chip proves its quantum hardware is an unmatched competitive strength. Wall Street chases software, but the physical bottleneck is gate fidelity. IBM's superconducting architecture scales better than Rigetti's Anka system. It relies on custom dilution refrigerators maintaining 15 millikelvin. This cryogenic engineering limits phased decoherence. Qubits remain stable longer. Uncle Sam is buying this physical thermal moat. That hardware reality drove today's massive institutional breakout. Quarterly financials showing modest revenue momentum for IBM. IBM surged 12.7% today as Uncle Sam targets quantum computing. Next-generation systems solving calculations classical computers cannot. By Q4 2026, federal defense spending will expand IBM's current 9.5% revenue growth to 12%. This expansion accelerates as sovereign security demands rise. We monitor a normalizing yield curve, the spread between short and long-term interest rates. Unemployment sits at 4.3%, holding recession risk to 6.7%. However, the Fed's 3.64% rate still pressures corporate budgets. As global trade faces tariff uncertainty, Washington is aggressively funding domestic quantum infrastructure to counter threats from China. This massive wave of sovereign capital acts as an unstoppable macro tailwind. It lifts IBM above the broader market's macroeconomic friction. IBM reported earnings per share of $1.91, beating the Wall Street estimate of $1.82 by 4.7%. A solid beat that signals strong execution. IBM is trending higher, currently at $297.80. IBM just printed a 4.7% EPS beat and management is spinning a quantum narrative, but let's cut the PR fluff. The earnings call 8K says the slides are furnished, not filed. That's legalese for we're not staking our Section 18 liability on these numbers. Meanwhile, R&D spend is up 11.2% YOY, but that's still only 12.3% of revenue, below the 15% threshold the lab sees in true hardware moat builders. Top 5 institutions are buying, yet insiders are silent. No buys, no sells, just radio silence. That's the red flag. When execs aren't putting their own cash on the table, the quantum story stays a press release, not a balance sheet. The momentum breakdown for IBM. RSI sits at 82, pointing to overbought territory, signaling caution on new entries. MACD is currently bullish, with the histogram crossing above zero. IBM surged 11.3% to $297.80 as institutional volume spiked 70.2% ahead of the Telum II mainframe hardware upgrade cycle. The bull case rests on a breakout from an inverse head and shoulders, a three-trough chart pattern signaling a bullish trend reversal, driven by global banks upgrading to Telum II. But an overbought RSI, Relative Strength Index, a metric measuring the speed and change of price movements, of 82.3 warns that high interest rates could freeze enterprise IT consulting budgets. Our AI score of 65 out of 100 reflects this tension. If Telum II orders surge next quarter, IBM breaks resistance at $297.80. If spending stalls, we drop to support at $214.64. IBM's 7nm Telum die is shipping in volume. Wall Street still calls it legacy. Is International Business Machines Corporation a buy at current levels or a trap? Let's hear your thesis below. Remember, this isn't financial advice, it's engineering-driven education. Markets move fast, data decays faster. Always run your own numbers, read the filings, and stress test every assumption. Past performance never guarantees future returns. The lab's work here is done. See you in the next deep dive.